Real estate or stocks? Which investment is right for you? That's the question we're going to unpack today. In the vast universe of investment choices, two stars often outshine the rest: real estate and stocks. Both offer unique opportunities and challenges and are considered vital elements of a balanced investment portfolio. But how do you know which one's the right choice for you? Well, that depends on a few things. Your financial goals, for one. Are you looking to build long-term wealth, or are you after quick returns? Your risk tolerance is another. Can you sleep at night knowing your investments may fluctuate in value? And then there's your investment horizon. How long can you afford to keep your money tied up? These are just a few of the considerations that should guide your investment decisions. So, buckle up and prepare for an exciting journey of financial discovery. Stay with us as we dive into the world of real estate and stock investments. Firstly, why might you consider investing in real estate? Well, let's dive right into it. One of the primary benefits of real estate investment is the potential for cash flow. This isn't some elusive, intangible reward. It's consistent, ongoing income that you earn from rent payments. Imagine a steady stream of revenue pouring into your bank account month after month. Sounds enticing, doesn't it? Next up, we have appreciation. Unlike many other assets, real estate tends to increase in value over time. This means that not only can you earn regular income from your property, but you might also see its worth grow year after year. It's like having a golden goose that lays both golden eggs and increases in size each year. Now let's talk about tax benefits. Yes, the tax man cometh, but with real estate, he's not quite as scary. The government offers a variety of tax benefits for real estate investors, such as deductions for mortgage interest, property taxes, and maintenance expenses. In some cases, you might even be able to defer capital gains tax when you sell a property. It's almost like the tax code was written by a real estate investor. Of course, we can't forget about diversification. Real estate can be a great way to diversify your investment portfolio, adding another layer of protection against market volatility. You know the old saying, don't put all your eggs in one basket? Well, with real estate, you're adding a whole new basket to your investment strategy. Finally, one of the unique advantages of real estate is its tangible nature. You're investing in something you can see, touch, and use. It's not just numbers on a screen or a piece of paper. It's a physical asset that you can improve, rent out, or even live in. It's like a safety blanket for your finances, providing a sense of security that many other investments can't match. So those are some compelling reasons to consider real estate. But what about stocks? Now let's turn our attention to the stock market. What makes it attractive? One word: potential. The stock market, with its roller coaster ride of ups and downs, offers the potential for high returns. You see, stocks have consistently provided a higher return on investment over the long term compared to other asset classes. But that's not all. Stocks offer liquidity that's hard to beat. If you need to convert your investment into cash, it's as easy as clicking a button. There's no need to wait for a buyer or go through lengthy paperwork. Your assets are as liquid as it gets, ready to be sold at a moment's notice. Don't have a ton of money to start investing? No problem. The stock market has a low barrier to entry. Unlike real estate, where you might need thousands of dollars for a down payment, you can start investing in stocks with just a few dollars. With fractional shares, even high-priced stocks are within reach, allowing you to diversify your portfolio without breaking the bank. And let's not forget about dividends. Many companies distribute a portion of their earnings to shareholders in the form of dividends. This can provide a steady stream of income even if the stock price doesn't move much. It's like getting a small paycheck, just for owning a piece of a company. Finally, let's talk about ease. Buying and selling stocks is a breeze in today's digital age. With a few taps on your smartphone, you can own a piece of your favorite company or sell it if you think it's time to move on. No dealing with tenants, no property maintenance, just pure, simple investment. So, there you have it. The allure of the stock market lies in its potential for high returns, liquidity, low entry cost, dividends, and ease of transaction. It's a game of strategy, patience, and a little bit of daring. Clearly, both real estate and stocks have their own merits. But what are the downsides? Even with its perks, real estate investment isn't without its drawbacks. Let's dive into some of the less glamorous aspects of becoming a property mogul. First off, there's the matter of property management. Owning property isn't just about collecting rent checks. There's also maintenance, dealing with tenants, and handling any issues that arise. It's a hands-on investment that requires time, effort, and often a thick skin. Then, we have the lack of liquidity. Unlike stocks, which can be bought and sold at the click of a button, selling a property can be a lengthy process. There's no guarantee you'll find a buyer quickly, and even when you do, the legal process can take months. This means that if you need to access your money fast, real estate may not be the best option. Next, let's talk about the high entry cost. Buying a property often requires a substantial amount of money upfront. This can limit the number of people who can afford to invest in real estate. In addition, the ongoing costs can add up. Think property taxes, insurance, and maintenance costs. These can eat into your profits and make real estate a less attractive option compared to other investments. And finally, there's the issue of market fluctuations. While it's true that property values tend to increase over time, they can also go down. This is particularly true in times of economic uncertainty. Property is not immune to the ups and downs of the market, and a downturn can leave you in a difficult position, especially if you need to sell. In summary, while real estate can be a lucrative investment, it's not without its challenges. It requires significant financial commitment, time, and effort. It lacks the liquidity of other investments and is subject to market fluctuations. So, investing in real estate can be a bit of a mixed bag. But what about stocks? Much like real estate, investing in stocks also comes with its own set of challenges. First off, let's talk about market volatility. Stocks are notorious for their unpredictable nature. One day, you could be riding high on a successful investment, and the next, you could be watching in horror as your shares plummet. This roller coaster ride is not for the faint-hearted. Then there's the potential for loss. While it's true that stocks have the potential for high returns, they also carry the risk of significant losses. If a company goes under or performs poorly, you could lose all your investment. Unlike real estate, where you still own a physical property even if the market value drops, with stocks, your investment can literally vanish into thin air. This leads us to the emotional stress that comes with stock investment. The constant ups and downs can lead to sleepless nights and a lot of anxiety. There's always the fear of the unknown, the worry that you've made a bad investment, and the pressure to make quick decisions. Moreover, investing in stocks requires a good deal of knowledge and research. You need to understand the market, the company you're investing in, and the broader economic landscape. This involves keeping up with news, analyzing reports, and making informed predictions. It's not as simple as just picking a stock and hoping for the best. And even with all that research, there's still no guarantee of success. In addition, there's also the issue of liquidity. While stocks are typically more liquid than real estate, selling your shares at the right time to maximize your returns can be tricky. It's all about timing, and unfortunately, that's something that's almost impossible to get right every time. And don't forget about the fees. Trading fees, management fees, and other costs can eat into your profits, making your investment less lucrative than you might have initially thought. As you can see, both real estate and stocks come with their own sets of pros and cons. So, it's essential to weigh these factors carefully before deciding where to put your money. So, real estate or stocks? Which should you choose? That's the million-dollar question we've been dissecting. We've delved into the advantages and drawbacks of both real estate and stock investments. Real estate offers tangible assets, potential rental income, and tax benefits. However, it also comes with high upfront costs, ongoing management, and market risks. On the flip side, stocks offer high liquidity, easier diversification, and potentially high returns. Yet, they also present volatility, a need for market knowledge, and they can be influenced by global events. The choice between real estate and stocks is not a one-size-fits-all answer. It hinges on your unique financial objectives, your comfort with risk, and your investment timeline. It's all about finding the balance that aligns with your needs and goals. Remember, the goal isn't to pick the best investment, but the one that's best for you. Thanks for joining us today and happy investing.